Welcome to the DLAI Fintech Conclave 2023 podcast series brought to you by the Digital Lenders Association of India and India Fintech Diaries. I'm your host, DLAI Fintech. In our first of many podcasts in this series, my co-host Hemant and I are joined by Sashank Rishyasringa, co-founder and managing director, Axio and President of DLAI. Sashank co-founded Axio, formerly called Capital Float, in 2013 and has helped pioneer technological innovations which have altered the digital lending landscape in the country. He has played a key part in Axio's evolution of becoming the leading digital co-lending model in India. Before co-founding Axio, Sashank was a senior engagement manager at McKinsey & Company, where he advised several Fortune 500 companies, national governments and non-profits on business strategy, product innovation and organizational design. He possesses an extensive understanding of the global fintech space and has prior experience in investments, financial inclusion, and mobile technology from his time at McKinsey. Today, we talk with Sashank on where the digital lending industry stands in India and what's in store for 2023. Welcome back to India Fintech Diaries, the show where we discuss all things Indian fintech. Today, in partnership with the Digital Lenders Association of India, we're kickstarting a new series to coincide with the DLAI Fintech Conclave 2023.
And Elroy, since we are just into 2023, what better way to kick things off than to look at year gone by and look into what 2023 holds for the Indian digital lending industry. To discuss this, we have with us today Sashank Rishyasringa, co-founder Axio and president DLAI. Welcome to India Fintech Diaries, Sashank.
Thank you, and thanks for having me on the show.
Sashank, thanks a ton for joining us today. While you're no stranger in the industry, can you also give us a quick introduction to yourself for the sake of our listeners?
Sure, Elroy. So I wear two hats in the industry today. On the one hand, as you mentioned, I am one of the co-founders of Axio, formerly Capital Float. We are a digital lending company that provides credit to underserved customers in India, both through checkout finance as well as smaller ticket personal loans. We also operate one of the most popular personal finance apps in the country that help people budget and make smarter decisions around money. In my other hat, I am currently the president of the Digital Lenders Association of India, an organization that was set up actually in the early days of this industry and has since grown to embrace, I think, over 90 players across the industry, across sectors and business models, with the goal of creating awareness around the industry, but also promoting the responsible growth of digital lending in the country.
Shashank, a recent report indicated that the Indian digital lending industry would grow to about $1.3 trillion by 2030. In many ways, 2022, the year that went by, was actually a very watershed moment for digital lending. Looking back at 2022, what are your top three pivotal moments in the last year that really shaped where we are poised today as an industry?
You're absolutely right, Elroy. It was a pivotal year, and I think it was pivotal in three areas that are really going to shape the future of this industry. The first was the acceleration in digital adoption. Most players came out of COVID having seen their customer metrics go through the roof and seeing their models scaling far more efficiently and non-linearly than ever before. And I think the way customers and consumers embraced fully digital experiences during the pandemic really deserves credit for the acceleration of the industry as a whole. We saw traditional barriers around KYC, around providing data, around being able to apply for things online, fulfill things online, all melt away in the constraints imposed by the pandemic. And what you have at the end of the day, after those 2 years that we all went through, is an industry that is seeing customer adoption and product maturing in a way that we would have expected to take a lot longer had we not gone through the pandemic. So I think certainly the acceleration of digital adoption in fintech and in digital lending was a hallmark of 2022. I think the second thing was entering a relatively benign period in the credit cycle after several years of turbulence. So, if you recall, in 2018, we had the ILFS led NBFC crisis in India,
Right.
and that really, I would say, kind of started to kind of almost become emblematic of a 3 to 4 year period in the financial services space in general that was characterized by volatility. You had a few years ago demonetization, then the rollout of GST. Just as the ILFS crisis seemed to be settling down, you had the pandemic induced crises through lockdowns and things like that. And I think 2022 was a breakout year because after all this volatility, you saw a period where credit growth grew, NPAs in the system came down, portfolios strengthened from a quality perspective. And I think that was a rising tide that lifted not just us in the fintech industry, but the financial services industry overall. And look, I think no discussion of the last year could be complete without talking about the regulation. The digital lending guidelines were a watershed moment in 2022. They represented both a recognition by the RBI of the way the sector has grown and the role that different players play. But they also, I think, represented a need for a lot of models to mature and for certain processes and systems to really kind of grow up for the much longer haul as this industry grows and matures. So I would say those have been kind of probably the three most defining features of 20.
Understood. And Shashank, in December 2022, the Reserve Bank of India hiked the repo rate by 35 bips, the fifth such increase in 2022, to bring the repo rate to 6.25%. Now, we have seen similar rate hikes across the globe, leading to a very different interest rate environment as we enter 2023. So, how do you think this will impact digital lenders in 2023?
I think the short answer is India is in a better spot vis-a-vis the rest of the world in this regard. And I'll explain why I believe that. Most Western economies went through a prolonged period of interest rates close to zero, easy money, and a benign credit cycle, and
Right.
consumer growth buoyed by a large amount of government spending. We actually had the opposite over the last few years through the many of the macro shocks that I described, and through COVID, I think we all took the harsh medicine of tightening belts at all levels, right? I mean,
Right.
companies, households, individuals, and emerged in 2022, I think a bit worse for the wear, but probably a lot more resilient and having actually faced a fair degree of volatility in previous years around interest rates and consumer demand and growth. As a result, I think ever since we've seen the global sort of headwinds that have emerged with the start of the Fed's rate increases, the landscape in India has actually performed fairly well. We've seen customer demand continue to be robust. We've seen companies be able to manage through the rate cycles. We've seen portfolio quality at a better state than it's ever been before. And I remain optimistic that this resilience will continue to kind of make India a bright spot in the global fintech and financial services economy over the next 12 months, as it has in the last 12.
Hmm. Interesting. And Sashank, since we are just at the start of 2023, when we look at 2023, what are the headwinds or challenges that you see the industry might face in 2023?
One thing, as I mentioned, is adapting to the new regulatory frameworks as laid out by the DLGs, right?
Right.
Right.
Um, I think there is clearly a need for the industry to embrace these guidelines, to work with the regulator, to evolve models in such a way that they are both scalable and compliant, and to put customer protection and customer education at the top of the agenda. I think 2023 will be a critical year to putting these building blocks in place so that this sector will be seen and will operate in a responsible and sustainable fashion over the next decade and beyond. I think the other thing that 2023 will be important to watch out for in this year is how the sector manages growth, right? Because the secular tailwinds around digital adoption, the kind of purple patch in the credit cycle that we're going through, are creating very, very kind of exciting opportunities for fintechs and digital lenders of all shapes and sizes. But what we've seen in the past is, in financial services, you have to always, have your foot on the brake pedal as well as the accelerator and know how to modulate those two things. And I think how we as an industry manage this period of growth and opportunity while, being grounded and thoughtful about risk and portfolio sustainability, I think that will have a huge impact over what this sector kind of looks and feels like, let's say 2 3 years down the road.
Shashank, you mentioned about Tailwinds, so let's just focus a little bit on that as well, right? What are some of the green shoots that you're seeing that will be important in 2023 for the industry?
One thing that I think we're seeing loud and clear is a maturing of a lot of digital infrastructure in the country. I mean, we've
Right,
all, talked a lot about UPI, but I cannot, emphasize how pivotal it has been for the takeoff of digital lending, which is in some ways a second derivative of digital payment.
right,
I think the second is Open, which is starting to really address the problem of opening up liquidity to the sector. I think the third will be account aggregator, where we're finally seeing critical mass of adoption from banks. That will create data portability, which will increase competitive intensity, but actually improve customer choice in a way that honestly we have not even seen in a developed economy.
right,
And I think the last big one is probably ONDC, which is really going to accelerate this marriage of credit and commerce
right.
to make goods and services more affordable for the next 100 200 million consumers in India. And I think the confluence of these four or five pieces of public digital fintech infrastructure, these are going to create very very exciting opportunities, and we're all just scratching the surface of what that might.
I mean, it's interesting you mentioned about OKIN, account aggregator, and ONDC. Can you maybe just delve a little bit deeper into it? Let's say hypothetically, if all this played out as we expected, right? How would it change the digital lending kind of life cycle for, say, a consumer loan or a business loan?
So let's go step by step, right?
Yeah,
Let's start with, why do people take a loan? It's typically tied to a commercial decision, right? A business wants to buy raw material, an individual wants to buy a consumer durable, someone wants to go to college, someone needs a car, a self-employed entrepreneur needs working capital.
right,
Now, historically, weaving credit into the flow of commerce has been hard. And so you've seen the
correct,
financial services industry evolve in terms of very vanilla products, right? Car loans, home loans, unsecured loans. What digital lending has opened up is the possibility of actually embedding these lending products at the point of purchase or at the point of sale. And that has huge ramifications for the ability of credit to really help supercharge the economy and do so in a responsible and sustainable fashion for both borrower and lender. Right?
right,
I think this single idea of what people are calling embedded finance has the ability to revolutionize the role of credit in India and change our growth trajectory. Each of the innovations that I mentioned directly grease the wheels of some aspect of this, right? ONDC puts commerce on digital rails down to the last mile. Oken unlocks liquidity to distribution islands that are intermediating these commercial transactions. Account aggregator allows data for credit decisions to be made available instantaneously, even within the 2 or 3 seconds that it needs to be made to effectively finance a purchase or a sale in real time. And I think this marriage of credit and commerce on digital rails, that is going to be what shapes fintech in India going.
Hmm, interesting. And Sashank, if I have to extend that a bit, for a very long time in digital lenders, especially the retail side, the differentiation was either that some of the digital lenders had access to this supply where they had dedicated relationship with few banks and they were co-lending with them, or the differentiation that was that they had a dedicated access to the demand where they had dedicated relationship with, say, a e-commerce company, so they know those customers well. Now, hoping that Oken and account aggregator and ONDC all work out, a lot of that may get democratized. That means a lot will come down to how personalized a particular digital lender is able to serve its customer. Now, in the West, it has been a big thing already. Do you think India and Indian lenders are completely ready to embrace it, or there will be some amount of more work that would be required on the data and tech front for most of them?
Look, I think there will certainly be work. It will be a long and non-linear journey, as both of you are well aware of in your day-to-day role.
yeah,
I do think this actually is part of the natural evolution of this ecosystem. So if you think about where we all began, a few years ago, and digital lending now in India is about a decade old. We all began by solving the problem of tech. How do you get someone to apply online? How do you digitize a bank statement? How do you replace human underwriters with automated algorithms? And I think largely over the last few years we solved that.
Right.
And I think kind of infra like eKYC, eNACH, UPI autopay, AA, all eventually turned these kind of idiosyncratic problems that each of us was solving independently into a common set of infrastructure that all of us could plug into. Now, at that point of time, we could have easily said, what are fintechs going to do if this is all available? But the reality is, we then migrated to the next tier of the problem, which was how do you unlock liquidity, right?
Right.
And then we started to see a lot of innovation around bank NBFC partnerships, bank LSP partnerships, securitization, co lending, and a whole gamut of models that moved beyond digitizing a loan application to figuring out how to actually scale capital when those loan applications need to be fulfilled. And now we're seeing Oken come in and say, look, let's try and turn some of these into public protocols that can be used by all and all so that we can open up this further. Now, that doesn't mean that these innovations go away because the problem of liquidity is going to exist for a long time to come. But certainly, Open will democratize that problem. And I think it will do is free up bandwidth for digital lenders to now migrate to the next tier of the problem, which in my mind is the crux and the holy grail of what we're all trying to do, which is risk.
Mm.
How do you sustainably and profitably serve the next 100, 200, 300 million customers whose risk is frankly undiscovered, right? How do you create playbooks to go out there and experiment in risk discovery, but then quickly stabilize those low and grow experiments into sustainable models, and where you can actually price risk adjusted returns in such a way and do segment wise kind of targeting such that you can actually build a sustainable credit market, retail credit market that is able to operate profitably at different tiers of risk. And I think once we're there, once we can actually micro target a Kirana store versus a Swiggy delivery boy versus someone living in a tier 4 city versus a salaried person looking to make a consumer durable purchase, at that point, we've truly cracked open the problem of financial inclusion in India. And that is also really where the IP of this business lies, right? I think if you look at any mature market, at the end of the day, the real differentiator of banks, fintechs, NBFCs, whatever name you want to give the people trying to solve credit delivery, is the ability to manage risk, is to underwrite, collect, and manage portfolio risk.
Got it. Now, Sishank, coming to the star of last year's fintech market in India, to the regulator. So, what are top 2 or 3 items that you hope the regulator will address in 2023 for your industry?
It's a great question, right? And I think I will answer that, but let's just take a step back and understand what the regulator is telling us, right? And I think
Mhm.
one is the DLGs were an acknowledgement of the fact that there is now a rich and varied ecosystem around the lending value chain. There are TSPs, REs, LSPs, and there is clearly now a place for everyone, but they need to refine their roles more clearly and the division of responsibilities in a I think a more structured fashion. And I think that's incumbent on us as an industry as much as it is on the regulator. I think the second thing that's clearly coming out is customer protection and transparency has to be the north star for everyone. And so things
Right.
like creating the right disclosures, pricing in a thoughtful and sustainable way, collecting with a high standard of empathy and rigor. All of these things are not just things that can be things you put up on your website, but you actually have to live and breathe them and demonstrate them in an auditable fashion, which I think is a extremely realistic expectation, right? I think where there is work to be done, and this is where we hope to engage with the regulator, is really around two areas, right? The first is around creating a level playing field for credit to be delivered fully digitally. And this means, for example, being for there to be fully digital KYC irrespective of who the borrower is. Right. Today we have digital KYC for an individual, but it's not as clear if you're lending to an SME. Today we have certain disclosures that are made in the digital realm as per the DLGs, but it's unclear these apply to the physical realm as well. So in some ways, harmonizing all regulation to ensure that at no point in time does a fully digital business model have a disadvantage vis-a-vis a physical business model, especially with regards to areas like KYC. I think that is going to be a very important area of engagement. I think secondly is this idea of risk sharing, right, which has obviously been a hot button issue in the discussion on FLDGs, etc. And I think our view as an industry association is that Risk sharing has a critical role to play in actually achieving the financial inclusion that digital lending is supposed to achieve, because it allows digital lenders to go out and underwrite and service new to credit customers and share in the risk that banks need to see to be a comfortable unlocking their balance sheets through these digital lending platforms. At the same time, we understand that the concerns around buildup of systemic risk on unregulated balance sheets. We understand that this model in some cases was kind of taken to an extreme where the regulated entities sometimes weren't carrying the risk at all. And I think our hope for 2023 is that the industry and the regulator are able to come to some kind of alignment on how risk sharing can be done in a thoughtful, capped way with the right guardrails, but without compromising the flow of funds to new to credit and underserved segments.
Shashank, a little bit of crystal ball gazing now. In many ways, BNPL was a model that completely captured the public eye in 2022, right? So, what do you think 2023 holds? Are we going to see the resurgence of maybe some new models that might grow in importance, or more of the same that we'd seen in the past few years?
I think firstly, you're going to see a lot of, I would say, consolidation around business models. So, what I mean by that is we've seen a lot of innovation in the last few years.
Yeah,
My prediction is that 2023 will see the leaders in each of those business models look to extend their gains, stabilize their models, and engineer them for the next level of scale.
right.
Because I think this is the year where digital lending is ready to grow up and can take its place among the other large sectors of the financial economy like microfinance and others that have been similarly innovative. So I think you're going to see a lot of stabilization, engineering for scale, ensuring that the models that have broken out in the last few years are able to meet the challenges of going from 5, 10 million customers to 100 million customers. That's number one. I think the second is you'll see a lot of business models starting to do more for their customers, right? Digital
Right.
lending to begin with took specific needs and gaps, right? Like SME finance, consumer lending, or supply chain lending, or vehicle financing, and focus deeply on that product or segment to come up with a better solution. Now that many of our members have achieved scale in their core products, I think you will see them starting to think about how to serve their customers more holistically across other needs as well, right? Be it credit, non-credit, etc., etc. And so that idea of becoming a one-stop shop financial partner, two segments that you have deeply understood through credit as product number one, I think will be a trend. And I think the third thing we will see is I think a lot of sophistication and evolution in risk models. I think now the sector has seen a fair amount of volatility over the last 4 to 5 years. It's now had been battle tested through a full credit cycle across different products and sectors. It has also been through in some ways a regulatory cycle of the regulator, understanding the sector, coming up with guidelines, iterating on those guidelines. And so I think we're all now in a position to build kind of in some ways the digital risk models of the
Right.
future that will really kind of in some way that will set up these companies for billions of dollars of scale and 10x higher than let's say where they are today.
It was great speaking with you today, Shashank. Thanks for making the time for us and coming on the show. If our listeners wanted to get in touch with you or DLAI, what's the best way to do this?
So we would love to hear from your audience. We are available on our website www.dli.com. We're available on LinkedIn, on Twitter. We also have an upcoming conclave, which is the largest in India, dedicated to digital lending. And we'd love to have anyone listening to this podcast to come by, check out our speakers, check out our agenda, and be more involved in how we're trying to build this industry in a responsible and
Excellent, Shashank. We'll include these details in the show notes. Thanks once again for coming on the show and spending time with us.
my pleasure, guys.
That's it from India FinTech Diaries this week. And the risk of repeating the information that Sashank just shared, if you have not already registered, please do sign up for the DLAI Fintech Conclave 2023. The event is on the 24th of Jan at the Taj Lands End, Mumbai, and brings together digital lenders, tech firms, government officials, banks, NBFCs, investors, and various startups to celebrate the industry as well as plan for the year ahead. With an insight packed schedule, the conclave is an excellent forum to understand the role of fintech in mobilizing the economy. So do attend. And until next time, stay safe.